Hello traders, Gary Wagner here, just before 10:15 in Honolulu, 4:15 in New York. It is Wednesday, 15th day of June 2016, and this is the Daily Report for Gold and Silver, a special report, Fed Speaks. Following comments made by Janet Yellen, as well as minutes being released, there will be no change in interest rates, no hike effectively this month. That is absolutely off the table. Those comments had a mixed effect on the equities markets, first taking them higher, then closing just into the close on negative territory. Gold, which was in essence unchanged up until the conclusion of the FOMC meeting, has had an upside boost. Dollar down. First, let's take a look at gold, trading up approximately $9 on the day, $1296.90, high $1300, and the low $1281.30. Let's take a look at our first gold chart. No doubt a solid move, upside move in gold today, trading up, as I said, about $9. To give you an idea of what we're looking at in terms of activity today, take a look at this 5-minute chart. Low of the day is right in here. That's at 1281. High, of course, 1300. That's right here. Fed decision comes out at 8 o'clock. That, of course, is Hawaii Standard Time. Markets trading roughly at 1288. And you can see the really strong spike just following release of the Fed statement. We're getting closer and closer to that elusive 1300 per ounce. Currently, as I said, 1296. We're looking at a Japanese average chart, which will show a different close as well as open because it fixes on the midpoint of the prior candle. But what we can glean from this particular chart, especially following Fed statements made today, is that there's no doubt this upward rally that has been so evident in the market since we hit these lows at about $1,200 per ounce is still, in fact, intact. Now, the caveat to that is, especially on a Japanese average chart, you wouldn't get confirmation that the trend is really petered out unless you started to get some warning signs. The typical warning signs that you look for are these pivotal candles, these doji candles, of course, a change in color, and then lastly, the development of lower wicks on a green candle. But at least for now, we can see that we're trading nicely within a channel. We are seeing higher pricing, but we are back really close to 1300. And to see that better, it's quite obvious we'll need to pull up a standard candlestick chart. And traders, I've done just that, standard candlestick daily chart. It has our current Elliott wave count as well as some fib retracement areas. My sense right now is that we completed the corrective action in the market when we saw this market track to about $11.99 on an intraday basis. Of course, that's where the rally began. We were a little late to the party, but nonetheless, we were guests in the party because we entered a long position that we are still in, of course, at 1245. It was based upon the fact that we saw this tremendous $30 spike. I think that was a Thursday or Friday. Following after the weekend, of course, we had this small rise, and that's the signal to get into the market. Not very much heat in terms of downside move in the market. We really only had to experience one day in which the market was actually lower than our entry price. We have been trailing our stops up throughout. Market, though, now is tracking at $1295.50. But what is really important to me, and this is what we want to see, we talked about this area here, which comes in roughly at $1286, I believe. We hit these highs the other day, but up until today's close, we were unable to trade above it. You can see that we had highs that went into that price point on an intraday basis, but we kept closing below that price point. Well, today's a different story. Today, we've absolutely seen a solid upside move, but more importantly than that, my sense is we could see this 1285 area effectively become support. Now, we're not that far off right now from 1305, so I'm not convinced that we won't see this market correct here. But one of the reasons for trailing stops is the fact that I do not know when we're going to see that key reversal. And when you do get these long defined trends, the only way that I know of to maximize that upside move is to work with trailing stops. For those clients, I did suggest an alternate strategy, simply pull profits. Traders who pulled profits got out at maybe 88, got in at 45. That was a nice profit indeed. As I said yesterday, we're on record as wanting to ride this rally out, and we're going to stay in through the Fed meeting and Fed meeting statements that came out today. Clients that did pull profits, you'll want to re-enter the market should we break above 1305 on a closing basis. I will absolutely let you know. For those that pulled profits and want to know the best time to re-enter, simply email me so I have an idea of how many out there actually pulled profits. From what I understand, the majority sided with my recommendation, which was to maintain our current long position and to maintain our stop. To that effect, our stop is still sitting at 1268 right in here. And what we want to start doing is looking at the the low in the market 3 days back. That's a good, really good rule of thumb, I believe. And right now that's sitting at around 1275. So I am recommending that you trail your stop up to 1275, just below 1275. It's at 68, so you're not moving it up that much. But as long as we have this move to the upside, and as long as the rally's intact and we keep our stop to the low of the last 3 days, we should be able to capture more profits should the market continue to rise. At the same time, we know that at some point it will back off. And at that point, we want to have pulled as much profits as possible. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.